Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Nice to see you again after the holidays. So let's take a look what is going on here, what has happened on the first trading session yesterday, although market was thin because actually not all countries starts to work on the 2nd of January, and Europe is still a holiday, but still the trading started and really big events already has happened. So if we'll take a look at the beg your pardon. So if you'll take a look at the Asian currencies, so you'll see the big spike on the Japanese yen especially, but on the Australian dollar, you can see this as well. So this is so-called the flash crash. So this is just technical spike on thin market. This was the huge stop hunting action has happened. But still, traders see the big risk aversion and demand for the safe haven assets. Many traders think that Japanese yen stands undervalued and expect a possible more appreciation of the Japanese yen if the new signals from the Fed will follow that the policy will be more dovish than expected in the previous year. Speaking about that, you know that tomorrow on the 4th of January, the Jerome Powell will talk in the Federal Bank of Atlanta, and the traders right now are waiting for new signals from the Fed concerning what to expect. Because currently, guys, if you will take a look at the Fed Fund futures rate that indicates the anticipation of the traders of the rate policy, you will see that the Fed Fund futures suggest only one rate increase in 2019. So it's very low expectation. They even stands below the what Fed said previously. So that will be really interesting. So as a result of this running into quality, you can see on the euro currencies also was collapse here. Yesterday's was big drop on the daily chart, but still on the euro currency it was not as tremendous as on the Japanese yen. Here it's actually dancing inside the range is continuing. Currently it's very difficult to count on strong appreciation in the United States dollar, because if we'll take a look at the Treasury yields, you will see another leg has been formed on the 10-year bond yields on the United States Treasuries. When the yield dropping, its currency becomes less attractive, and that could be a signal that market is not doesn't believe in the promises of the Fed on rate increase. So it's impossible to combine these two things when the Fed suggest and promise the rate increase, but the rate of the 10-year drops, and currently spread between the short-term yields and the long-term yields stands at a very small range. So this is typical usually for a recession when the yields are equal for the short-term and long-term. For example, here's some chart of the 3 months exist. Sorry, this is just a length of the chart itself. So the dropping on the yield reduced the attractive of the currency. So that's why, although as you can see currently dollar has dropped significantly, but in the current circumstances, guys, I think that we should follow our same tactics that we have announced before the holidays. It was focusing on the short-term setups. While market stands inside this range, we need to search for short-term setups inside of this range and trade them. So you can see that yes, the action was a reversal session. This was market creating new top and close below the lows of this candle, but actually it has engulfed the previous couple of weeks probably this collapse. It means that the impulse of this trade, although maybe it is technical, but impulse of this trade is significant, and it means that some continuation here probably should happen. Something of that sort, guys. Here, remember that we have talked about this engulfing. After retracement, another leg has been formed. So kind of the ABC action has been formed on the intraday chart. After that, we started trade this catalyst triple to buy, if you remember. So anyway, this could become the same thing. So here a retracement could follow, and then at least minor continuation could happen. That's the setup that we will focus on within the couple of sessions, probably till the end of the week. So on the larger scale, guys, all these consolidations, especially on the monthly chart, if you will see, looks like the pennant, all flag patterns. Potentially it looks bearish because to break this stop, market needs to show very significant upward action because the invalidation point of the long-term bear trend stands rather far. So market needs to form the bullish reversal swing on the monthly chart to erase the long-term bear trend. That's why we do not talk yet on some big changes in the long-term picture. We're just watching for tactical steps. On the 4-hour time frame chart, you could see that market stands at the fib support. So this is 1320 major 618 support. And let's take a look. That is monthly pivot support 1. So market drops the pivot here and hits the pivot support 1, shows an irreversible pullback. Weekly pivot support 1 already has been broken. It means that market stands in a short-term bear trend. This is not some kind of retracement of the bullish trend, but this is short-term, could be qualified as the bearish short-term trend. So now we stand in the pullback. Here is potentially two kind of stops exist. So first stop on the hourly chart, you could see this is potential double repo buy because it stands at the fib support. Market has formed perfect double repo buy. It's very good for us down, close above the 3x3, close below, and creating the new lows. And here you also could see clear signs of the wash and rinse. So kind of the fast drop and fast reversal up. Kind of the railroad track has been formed. It's very good when you're dealing with the double repo buy. Suggesting the minimum target of the double repo stands here, 50% resistance of the whole thrust down. That's the first potential area or retracement that market should reach. Potentially it could be also the 618, 1420. Here, guys, this will be our task. So that is the short-term bullish trend that exists here. Here, guys, when the market will hit this area, we will start to think about the possible downside continuation following this idea of some kind of the A, B, C reaction down. But for that purpose, we need to see how market will reach this area. So we need to see gradual action. Maybe it will be kind of the A, B, C pattern. In this case, we will get Gartner's triple to sell or something of that sort. We do not want to see the same kind of action, but in opposite direction. It will be just one white candle up. This definitely will be not the sign to go short. So it means that currently we'll have the bullish step in place, short-term bullish step. Concerning bearish setup, we need to see, we approximately will be watching for these areas, but also we need to see how market will reach it, what price action will follow. We need to, for taking the short position, we need to see the gradual action. It will be preferable if we will get, as I said, that is triple two pattern. So that's what we'll be watching for in today's session on your accounts, and also keep an eye on tomorrow's Powell talk on the Federal Reserve Bank of Atlanta.